Starting right now.
Welcome to the Lloyd's Latin America and the Caribbean Academy. My name is Yelhis Hernandez, and I'm the Mexico Country Manager and the Central America Market Development Manager. Today, we will have a presentation from Newline, one of our managing agents based in Mexico, and they will talk about D&O. This presentation is being recorded, and you can watch it later on YouTube. Please feel free to use the chat to submit your questions during the presentation, and please spread the word within your network. Without further ado, let me introduce you to our speaker for today's session, Alberto Andrade, Financial Line Underwriter at Newline, Latam. He has around 10 years of experience in underwriting and brokerage of financial lines. Among the different positions held, he joined AIG Mexico as Financial Line Underwriter in 2011. Later, he collaborated as reinsurance broker of financial lines at Willis Re, in charge of the financial line portfolio in Mexico. And he also was the underwriting manager for financial lines in Zurich, Mexico, and later a deputy director of the financial line underwriting area and responsible for the financial lines portfolio in Zurich, Mexico for around 3 years. Finally, he served as a head of financial lines at Ancora, a retail broker in Mexico. Mario has a degree in financial management from the Tecnológico de Monterrey and is currently pursuing a master's degree in management from the Universidad Iberoamericana and the Instituto Empresa in Madrid, Spain. He has studies in international business from Eiga Helia Institute, University of Applied Science in Helsinki, Finland, and various postgraduate programs in private equity and law applied to finance and insurance, both at University Anáhuac and Italy. He joined a Newline group in June last year as financial lines underwriter for Mexico and Latin America. Welcome, Mario. The floor is yours.
Thank you, Yelhis. Can you hear me well?
Yes, we can.
Great. Well, first of all, for me, it's a pleasure and an honor to be here representing Newline Group. And I'm trying to talk with you about D&O and the current market situation. This is a very extended topic, so I will try to focus on some specific issues that probably are in your mind as brokers and members of this financial lines market in Latin America. I will try to focus the conversation on a specific context, the post-pandemic environment for D&O insurance in Latin America. Can we change the slide, please? Well, the agenda could be, I was thinking yesterday about the structure of the presentation. And for me, I think there are 4 main topics that will be important and will be useful to discuss today. First of all, the D&O basic coverage and the market conditions. I know that we have a very expertise audience on the D&O world and the financial lines world, but also it's very important and relevant to remember the fundamentals of D&O, very brief, and the current market conditions. This is also important. Then the soft and the hard market. This is a very hot potato right now in the financial lines and the D&O world, not just in Latin America, but all across the globe. The soft market, the premiums, and the hard market, the increases, and the hardened coverage and particular terms in specific D&O programs. Then COVID, the pandemic, and the direct effects on the D&O market, especially here in Latin America. Then the post-pandemic context, what is happening after the pandemic, what is happening now in Latin America when we surpass the worst part of the pandemic. The pandemic is not over, but now our economies are wide open, and we are trying in every country to go back to business. So this is like a different stage in the pandemic. The worst part apparently is now over, but what is happening right now in the post-pandemic world for D&O especially? And finally, which I think something which is very important for everyone in order to imagine the need of a D&O coverage, not just for public companies, but also for private entities, claims. What is happening in the claims world right now for D&O, and the lessons learned before and after the pandemic. And after that, I think we'll have some time for questions and answers from you. Can we change the slide, please? First of all, and as I said, what is a D&O insurance? Well, basically, and the dictionary definition of D&O policies offers liability, cover for company managers to protect them from claims which may arise from the decisions and actions taken within the scope of the regular duties. This is for decision makers of the companies, for the leaders of the entities. As such, D&O insurance has become a regular part of company risk management. Then, what is the general scope of D&O? What is happening in D&O right now? What covers and what is not covered on D&O? First of all, the corporate governance means more D&O exposure, and increased corporate governance means more exposure for a D&O. This is very important because we have to start with the idea that even if you are the most important and the most relevant engineer in the market, and you become the CEO of a company, you are an expert on the engineering process of your company, but maybe you are not an expert on taxes. Maybe you are not an expert on human resources. Maybe you are not an expert on health and safety of the employees. You need to delegate some of these decisions, but at the end of the day, you are responsible as a leader of the company. You are responsible for that actions. You need to take decisions. You need to sign papers in order to represent the company, not just in the engineering part, but also in the other areas. You need to know and you need to comply a lot of rules and regulations. Even, I mean, more when you are an international company, you have to deal not just with local regulations and laws. You need to deal with a lot of different legal frames in different territories. So the responsibility of a D&O, it's very big. And as I said, you need to start with the fact that no one is an expert in everything. So even the most experienced, the most famous CEO in the market is not an expert on everything. So everyone in that positions has an exposure. Then the D&O insurance covers claims resulting from managerial decisions that have adverse consequences. This is also very important because since the D&O scope, a third party is everyone except the D&O. This is different from other third-party definitions, such as in casualty, for example, where you have a very specific list of what is a third party or what is not a third party. In the case of the D&O world, in the case of the D&O wordings, a third party is everyone except the D&O. So you could have a claim, you can have an allegation of a financial loss from clients, from employees, from regulators, from pro bono organizations, from even your own company, your own entity. So Also, this is very important to have in mind for the next slides. Common risk scenarios include failure to comply with regulations or laws, reporting errors or misrepresentation. Common exclusions include fraud, intentional not compliant acts, and property damage. Another key point from D&O, as you know, the most important exclusion on the D&O wordings here in Latin America and all over the world is the fact that you act intentionally, the fact that you act with the a priori knowledge of the consequences of your wrongful acts. This is not covered on a D&O policy. This sometimes means a fraud, sometimes means an illegal action. So any policy in the world could cover an illegal action, could cover a fraud. But what is happening on D&O? And this is, I think, an advantage for D&O, for the D&O world, because everyone, as a third party, could say that you are responsible for a fraud, that you are responsible for an illegal action. Then you have, they have to prove that you knew the consequences and the rules before the action, and that means that you act with the knowledge of criminal action, of a possible financial loss of a third party. But no one, any insurance company, any reinsurance market is allowed to determine that. That means that when you have a claim that is alleging that you are a criminal, if I can say it in that way, the D&O policy must act and pay the defense cost of you and the other D&Os involved in that situation. Just when an authority, when a court, a judge, or a facultative authority determines that you committed a crime, that you committed these actions with the knowledge of the consequences. It doesn't matter if you have a material benefit on your assets, or you just did it because you didn't like that supplier or that customer, whatever. Then the policy will activate the main exclusion. Before that, the policy should pay for the defense cost. In many of the cases, we have to check in the unspecific wording, but this is the generality. Then, if you goes to the exclusion part of the policy, the insurance company and the insurance market is allowed to ask you for the money they paid in the process before the situation. International insurance programs necessary for companies with global subsidiaries and offices. This is also a very important advantage of a D&O program. As I said, when you are acting as a decision maker on a global international company, you have to deal with a lot of different regulations, laws, and compliance. Then a D&O program, the D&O wordings, the D&O schemes could allow you to construct a multinational program where you have a general policy from your holding, I don't know, Australia, the United States, France, or Brazil, or Mexico as a holding, and then local policies in where the subsidiaries of your company are. This is also important because the local policies will be issued in the local legal language. And if you have a situation on a specific market, on a specific subsidiary, you will have a local policy with advantages that means. So this is also very important from a D&O perspective. This is a generality of D&O. Many of you know this very well, but I think it's important to have this in mind for coming slides. Can we change the slide, please? Also, D&O insurance in action. How does it work as a generality? Well, your business has a corporate board. This is the generality for many entities in the world, for most of the companies in the world. If you have a board, you have D&Os, then you have the need to protect them against lawsuits and claims from third parties. The D&O insurance covers them from lawsuits, as I said, and claims from third parties. The first action of a D&O policy is to pay the legal defense cost. Then, if there's a settlement or a final resolution from an authority, and that means that you have to pay, you are personally responsible, and you personally have to pay an amount of money to that third party, then the policy covers that. Here, it's important also to remember that probably 80% of the cases of D&O claims scenarios, D&O in the whole world, not just in Latin America, finish on the legal defense cost. Why? Because in many of the cases, the D&O got involved on a specific lawsuit or claim from a third party just because they are the D&Os. They are the representatives of the company, but they don't have anything to do on that situation. That means that you will pass through a legal process, but at the end, an authority or a settlement between parties determines that you are not responsible for anything. That's okay, and that's, as I said, the 80% of the claims on D&O, not just in Latin America, but in the world. But that defense cost or that legal process means money from you, from your personal assets, or money from your company. That's the main advantage for D&O in these cases. In the other 20% of these cases, when you have to pay an indemnization to a third party, this is also covered in the policy. I have to remember you that this is the generality of D&O. We need to check the specific underwriting in a specific D&O program to determine if we are in this scenario. The underwriters have the capacity to change this if they think that this doesn't work for a specific account. This is just the generality. This is the theory. This is the general terms. This is the nature of D&O. Just like a summary. Sorry. I can't see the presentation, Diana.
Give me just a second.
The presentation is on. I can see it. Mario, perhaps it's your computer. What I can see is on the D&O Insurance in Action slide. Diana, can you move the presentation to the next one, please?
I can see it. Yeah. Okay.
Good.
Yeah, I lost the image for a moment. Okay, I'm talking about the action of a D&O in a glance. First of all, a manager allegedly fails to perform his or her management role. Second, as a result, several people, internal or external, decided to sue the manager. As I said, the third party could be everyone except you as a D&O. Next, the manager is informed of the claim. Then the manager contacts the legal and risk management departments of the company. Then legal and risk management departments inform their D&O broker, insurer, and provide claim description. Then, if the claim is covered according to terms and conditions of the current policy, the insurer pays for defense costs, 80% of the cases. And next, if the claim is covered and the case is lost, the insurer pays for the loss and for the defense cost. This is the 20% of the cases. The most important part for me, for D&O, is this reminder. If the manager is not insured, he or she has to pay for the defense cost, and the financial loss impacts personal assets and careers. This is very important. We need to see D&O not as a policy for the entity, for the big multinational and global company. This is a coverage, a personal coverage for the human being taking decisions on any entity. Doesn't matter if it's public company or private company. Doesn't matter if it's a big company, a mid-sized company, or a small startup company. If you have a D&O coverage, you will have an insurance for this type of events. If you don't have this, you maybe have to pay the defense cost and the final settlement, if the case, with your own personal assets. This means probably your life savings. This means probably your total assets and the family assets, which is, it takes a different dimension if we see it in that way. Maybe you could think, okay, but that's the reason of a company. At the end, it's an employee at the end of the day. Then they must have the representation and the backup of their company. Yes, sometimes it doesn't happen. There are some scenarios where the company is not allowed or just don't want to be part of the scenario of the lawsuit, so they leave you alone. Then, if you are alone, you have to defend yourself with your own money. That's very important. If you have a D&O, you will not suffer from this. If you have a D&O, if you don't have a D&O, you will suffer. We can do an exercise. Imagine a D&O as a health insurance policy. If you get sick, and if you have a good health insurance policy, you can have the best treatments. You can have the best attention on better hospitals. If you don't have a health insurance policy, you may pay for your recovery. You may go to a cheaper medical institutions in order to don't put in risk your assets and your savings. It's the same case in D&O. If you have a D&O policy, maybe you will have a good law firms that will represent you against a lawsuit or a claim from a third party. If you don't have a D&O, maybe you have to ask for the help of mid-size or not so known law firms that could represent at the end of the day a worse scenario for you and your family. Can we change the slide, please? This is also very important, and this more for the chatting, but also I guess the data is relevant. Worldwide, the D&O insurance market amounts around $11 billion of premium volume, with the US market representing around 60% of total business. Europe is the second largest region with an estimated market share of 25%. Then Asia Pacific, Canada, and Latin America follow with stable and low single digit. But also this is a very good cake size if we think in that way for Latin America. Also, that means that there's a lot of room to grow. There's a lot of potential clients outside on the street. A lot of private companies that don't know what is a D&O coverage that could be good customers in the future. Market penetration of this product, as well as insurance limits, vary strongly from country to country, depending on the size, listing, and international exposure of particular companies. Nearly all US listed and the vast majority of the Financial Times Stock Exchange, 500 companies and larger financial institutions buy D&O insurance. This is in the US and this is in the UK. This is in the Anglo-Saxon world, but at the end of the day, it's a trend, and we are following that trend in the long term, in a long-term scenario, of course, but we're moving to that in the next couple of decades, probably. The bigger companies in the world, they can easily reach 1 billion limit in a D&O program, but we are talking about, the blue chips and the big companies, worldwide companies like, I don't know, like Amazon or General Motors or the big financial institutions. In the private and small and medium-sized sector, the limits are around 5 to 50 million. We can allocate here also the public entities in Latin America from 5 to 15 million. There are some outliers, some companies that buy 100 million, 150 million in Latin America, but there's just a few of them. The vast majority of the companies that buy D&O are between 5 to 50 million on limits. However, when considering these figures, one must always keep in mind that since D&O claims are their coverage could be a massive reputational risk for corporations and their managers. It's very important to say that these figures are estimations, because sometimes when a D&O has a D&O claim, this is not public information. So many of the times this is handled strictly confidentially. So we have to estimate this. There are some territories, some jurisdictions where the companies are they need to make public this information in order to be statistically clear, such as South Korea or even Brazil. But many of the other countries in Latin America, especially, the D&O claims scenarios are some of the times confidentially, but this is not true as a whole, because in the market, in the industry sector, the people talk, and the insurance companies have to report losses. So indirectly, we know when we have a large claim or a medium-sized claim in the region due to the reports of the insurance company and the insurance markets. The next slide, please.
And Mario, before moving into the next slide, there is a question. The question is, what is the difference between a D&O coverage and an E&O?
Okay, that's a very important question. Imagine the company as a pyramid. The D&O coverage is for the decision makers of the company, is for the leaders of the company, for the CEO, for the CFO, for the CEO, for the directors, for the chiefs of the company. It doesn't matter if the CEO of the company has any academic degree, probably is the second or the third generation of leadership in that company, and that guy or that woman don't have any academic degree, but he or she is the CEO, and that's what we have to know. They are the leaders. D&O is for the leaders of the company, for the top of the pyramid. E&O, errors and omissions, is for professional errors and omissions, for professional wrongful acts. When you are an architect, when you are an engineer, when you are a lawyer, and in the practice of your profession, you make mistakes that represent a financial loss to a third party, you will have a claim. You will have someone is knocking your door and asking for a compensation for your mistake as an architect, as an engineer, as a lawyer, as whatever. But when you are acting as a professional, this is in the mid-size of the pyramid and probably the lower parts of the pyramid. Also, the E&O policy covers the entity, not the persons, the entity, the architect's studio design, the law firm, and every claim against the entity or the persons within the entity will represent or could represent an E&O claim for professional errors. I don't know if I'm clear with this. And then we have, as I said, the top of the pyramid. When you take managerial decisions and you cause a financial damage, you will have a D&O claim. That's the difference between one policy and the other. You cannot buy a D&O for a trainee. You cannot buy a D&O for an executive assistant. You have to buy a D&O as an entity for your directors. But you can buy an E&O policy for your experts, for your bankers, for traders, for your architects, for your engineers, etc. That's the difference between one and the other. Okay, and about the basic coverage. In D&O, we have three basic coverage. This is valid in every D&O policy from here to China. It's the same case all over the world. We have Side A, Side B, and Side C. The Side A protects assets of individual directors and officers for claims where the company is not legally or financially able to fund indemnification. This is the worst case scenario for the D&O, for the human being. Why? Because when you are on this scenario, you have the protection or the backup from your company. Why? There are many scenarios, but there are mainly three cases. First of all, insolvency. The company is bankrupt, so they don't have money to pay for your lawyers. Even if they want, they don't have money to represent you, to pay for your lawyers. So you have to represent yourself, or with your own money, your own assets. Second, when the company thinks that you take the decision that derivates on that lawsuit since a personal perspective, and they don't want to be part of a reputational crisis because of your actions. This is also, it happens. Not so many times, but it happens. When the company says, okay, you take that actions personally, I don't want to be involved because my brand name is could be jeopardized for your actions. So this is your case, I'm not involved. So represent yourself. And the third scenario is when your own entity is the third party. When your own entity is asking you for an indemnification for your actions. It also happens, not so many times, but we already see some cases in Latin America from this scenario, which means that it happens. The Side B is a reimbursement to public or private companies to the extent that it grants indemnification and advances legal fees on behalf of directors and officers. This is probably 90%, 95% of the cases of D&O claims all over the world, including Latin America, of course. This means that when you have a lawsuit, if you are a D&O and you have a lawsuit naming you as a person and a representative of your company, you will have the backup of your company. They will pay for your lawyers, they will pay for your defense costs, they will respond from a final settlement, for example. Then the company goes back to the insurance company, to the policy, and asks as a reimbursement for that defense and settlement cost. This is, as I said, the vast majority of the cases, the Side B. And then we have a Side C, extend cover for public companies, the entity, not individuals, for securities claims only. This is only for public companies. And when I'm saying public, it doesn't mean that a government ownership company. A public company means that a company that is present on the stock exchange of one or many countries. A public company is one that has some securities in the market. And the Side C works in this scenario when you have a claim against the entity, but derivate from your activity as a public company. We have a Side C claim. You need to activate the Side C coverage of the policy. This is only for public companies. Many of the times in the underwriting process, in the regular basis, many brokers ask for the 3 coverage for a private company. It has no sense because you will never have a Side C claim on a private company. But if you, as an underwriter, include a Side C coverage on a private company D&O policy, that will increase the cost, even if that clause will never activate because you are a private company. So we will be aware of this. If you are a private company, you just need Sides A and B, not C. If you are a public company, you need a C side coverage. The next slide, please. This is very important also, and we need to take some time to discuss this, maybe not now because of the time, but this is important because what are the duties and liabilities of a D&O? This change between territories. This is not the same, strictly the same in Brazil than in Argentina, than in Mexico or in Canada or in South Africa. But as a generality, these are the duties and liabilities of a D&O of a company all over the world, kind of. Non-delegible duties of the board. The following basic duties of the board of directors cannot be delegated. It's your responsibility as a D&O. You are receiving a paycheck every month or every 2 weeks, I don't know, and you are receiving bonuses every year for your activity, and you cannot delegate these actions. This is part of your work. This is part of your role. Overall management and instruction of the corporation. You represent your corporation. You need to see everything from the top position of the company, but you're responsible, not just in the pyramid, but also you're responsible from the view of others, regulation, laws, clients, suppliers, etc. Establishing the corporate organization following shareholders' instructions. This is very important because if you don't follow shareholders' instructions and you have a problem, that means losses for some shareholders, you could have a claim from them. Then you are in the situation where the third party is your own company. So we have to be aware of this. You have to follow the instructions of the owners of the company in which you work. You are an employee. It doesn't matter if you are the most important CEO of the automaker industry. At the end of the day, you are an employee and you have to respond for that to the owners of that company. Structuring the accounting system with the shareholders, auditors of the corporation. Conducting annual shareholders meetings. This is very important, especially for public entities, because you need to follow some compliance and regulations. If you don't do this, you could have an investigation. You could have fines and penalties from the authorities. Implementing shareholders resolution. Reporting insolvency to the court. This is not. I mean, this is a logical thing, but it's not. This does not work in the same way in different territories, but it's also a duty for the board and for the directors. Accounting, supervision, recording, filling, and information system. The lack of information, the misinformation, the errors presenting information to authorities, to shareholders, could represent in the future a liability for you and a claim on a D&O policy. Selecting and supervising management. You are the top leader of the company, probably the CFO, but you have to decide what kind of people will help you in that role. But at the end of the day, as I said, you are the responsible of that selection. So the errors are your errors in the mind of the third parties. Preparing the annual report for the shareholders. Liabilities of D&O. Unauthorized actions that are not set out in the company's bylaws. Failure to perform any of the resolutions adopted by the shareholders meeting. Negligent or fault. This is very important. And I need to remark this. The D&O works, the D&O exists almost 90 years ago, and it's very valid today more than ever, because a D&O is not an expert on everything. You could be the most important one in something, but you don't know everything. And you have, and as a D&O, as a CEO, as a CFO, as a whatever, you have to take decisions on everything. Then the possibility of a negligent, a wrongful act is very present. Actions against the resolution of the shareholders meeting. I'm sorry, I already said that. Lack of duty of care and lack of duty of loyalty. This is, those are concepts in the Anglo-Saxon law, in the common law scheme, but also they are also valid in our legal frames in Latin America. We can have claims, important claims, allocating this type of liabilities from the D&Os. Can we change the slide, please? Very fast, depending on the local legislation, but environmental liability, banking laws and regulations, health and safety legislations. This is the most important one right now. Why? because, as I said at the beginning of the presentation, we are in the second stage of the pandemic. During the first 2 years of this crisis, many of us had to take personal and professional decisions that change the course of our lives. It's the same in the companies. The leaders of the companies had to take decisions that change the course of the company's destiny, of the company's fate. The market, not just in Lloyd's, but also in the local markets, are expecting many claims in the coming future, in the next years, regarding health and safety legislation. Why? Because the questions are start to be asked. Good processes on the safety and health procedures, massive relocation of people, adequate materials and protection, that could represent a D&O claim in the future in many countries and in many policies. Taxes and social security and insolvency. This is also very important, especially for Latin America. Directors and officers are liable for negligence, willful misconduct. They are obligated to pay damages to shareholders. The insolvency could be a result of the market situation, could be a result for externalities of the company. But if a shareholder, if some shareholders or even some regulators think that you as a D&O are in part responsible of that insolvency process, you could face charges, you could face some liabilities. This is very important. And this is a D&O common scenario. Can we change, please, the slide? The soft and the hard market. Please, can we change the slide? This is more for the chatting and for the informal conversation, but this is a little bit of history about D&O. D&O was invented in the Lloyd's market in the 30s, before the Great Depression, in order to protect companies and shareholders from losses. Then we suffer from soft market to hard market scenarios in the next decades. Hard markets in the 80s, soft market in the 90s with the technology boom, and then we face a hard market due to very famous bankruptcies. Do you remember Enron in Texas, the energy company? Do you remember? What is the other company? I don't know, an accounting firm very famous that also went bankruptcy due to these all problems and accounting situations. These bankruptcies represent for the D&O market a lot of losses. Then we face the September 11 scenario, where many companies had to activate D&O policies for different scenarios and different things. In 2002, we have the Sarbanes-Oxley Act that made the D&Os personally responsible for financial issues and operational issues of the companies. Now you are personally responsible for the financial behavior of your company. Then we have the subprime crisis, then the Dodd-Frank law, which reformed the Consumer Protection Act, which is very important, especially in the United States. But as I said, we're following the trends. So probably you will see in the future many wordings of D&O policies in Latin America with these clauses, Dodd-Frank exclusion and Sarbanes-Oxley exclusion. And we are today changing from a hard market to a soft market. Can we change the slide, please? The last years of a hard market, we faced in the last 3-4 years a hard market. That means that the insurance companies and the insurance markets suffered from severity in many claims for commercial entities mainly. And then the premiums increases. You can see some statistics about how the market went hard, and now we are trying to change from a hard market to a soft market. I will not stop here many times because I think we are almost to finish. But for me, I'm very pleased to discuss these charts with you later. Can we change the slide, please? The COVID and direct effects on the annual market. Can we change, please? An estimation of claims for public companies per industry and big concerns after pandemic for financialized market. In this pie chart, you can see the expected claims in D&O in the coming years, depending on the industry, and derivate from pandemic wrongful acts, if I can say it in this way. Technology, biotechnology, manufacturing, financial services, energy, retail, and others. The main concerns of the market, on the main reason that we are expecting claims in the future: cyber attack, data losses, cyber extortion, regulatory risk, climate change, COVID issues, health and safety, mainly. This is not written in the stone, but as a perspective and as a projection, we will see these type of claims. We will see these industries involved in big claims, in big losses in the coming years for wrongful acts produced during the pandemic, or sometime short time before the pandemic and short time after the pandemic. Can we change the slide, please? Insolvency, for me and for many underwriters, this is a concern in specific markets. Insolvency is not a problem in Western Europe right now. Insolvency is not a problem in the US or Canada or New Zealand or Australia, but it is a problem in Latin America. Why? Because, as you know, many companies shut down operations during the pandemic. Many of them are trying to recover, but many of them are facing a lot of problems, debt problems, and mismanagement also. So insolvency is a cost present in the D&O policies in the D&O market in Latin America. So we have to be careful of this. So in the underwriting perspective, you will see in a regular basis the insolvency exclusion clause. Why? Because the D&O doesn't want to pay for a scenario that is projected for a specific entity. If you see the financial statements of a company and you see trouble on the numbers, you probably underwrite that risk, but you will include the insolvency exclusion clause. Since the broker perspective, we need to understand that this is logical. We don't want to have a lot of claims due to insolvency when we knew a priori that this could be a potential scenario, catastrophic scenario, especially in Latin America. So the insolvency exclusion clause will be present in many of your policies in the future. The next one, please. The management on the review by shareholders. I was talking with you about this when the company becomes the third party that is claiming you for a financial loss. In this case, the side A of the policy will activate because the company is not in the scenario that allows it to pay the defense cost for you. Then you're alone because your own company, your own shareholders are the ones that are asking you for an indemnification. Then the side A of the policy is present. It's very important to mention that the side A on D&O policies has no deductibles and 99% of the cases. Why? Because if you as a person, as a human being, have to activate the side A of your D&O policy, a deductible of $100,000 could represent for you, all your savings could represent for you a very important debt and compromise the future of you and your family. Then the logic here is that the side A has no deductible. The company, the insurance company, start acting since the first dollar of your claim in the side A, only in the side A. The next slide, please. The post-pandemic context. The next, please. The hard market is still here. I said that we are trying to change from a hard market to a soft market. This is true, but we are in the middle of that in Latin America. The hard market is still here. And statistically, in 2022, the average premium increases is set on 35% in the 64% of the whole financial lines portfolio. That means that if you have a portfolio of 100 D&O policies, you will see increases in 64%, in 64 of them. And the average increase in that amount of policies is 35%. This is the general statistic of D&O in Latin America. So it is important that we know that the increases are still here, that the companies that sell D&O, they need to recover from the hard market now, and we are seeing these increases. There is no appetite for SPACs, unlimited appetite for political risk, M&A, mergers and acquisitions, and US listed exposure, restricted appetite for BBB and cyber in the region. This is not D&O properly talking, but it's financial lines. And it's important to mention that many of the local insurance companies with financial lines, with a financial lines practice, and many of the reinsurance markets in Latin America does not have appetite for BBB and cyber, and limited appetite for M&A, US listed exposure. That means that public companies in Latin America with securities exposure in the US. And SPACs. SPACs is a sort of specific entity created to go public in some cases. This is in the gray area in the regulatory schemes, even in the US. So the D&O policy are not interested in to cover this sort of experiments in the US market mainly. So SPACs are not covered, and there's no appetite for that in Latin America. Maybe you can find some reinsurance markets with this appetite, but as a generality, they don't have appetite for this. Climate change and geopolitical scenarios also are concerns in Latin America. Every country is different. The political environment in Colombia, inflation rates in Argentina, regulatory changes in Chile. As you know, they are deciding for a new constitution, which is a deal breaker on the legal frame in a whole country, in a whole market. So even if we are not expecting problems, it's a thing. So they are changing their constitution. So we have to wait and see what kind of changes they will have in the new one. Economical environment in Mexico and other countries in the region. That's the general perspective of the market. Can we change the slide, please? Bribery and corruption. This is also a very common exclusion in the D&O policies in Latin America. Why? Because sadly, we know that our region is known in the whole world for this high standards of bravery and corruption, high levels of bravery and corruption. Then, as I said at the beginning, if you have an allegation of bravery and corruption, they have the third party have to prove that you are guilty. In the midterm, the policy must pay for the defense cost. But in the specific cases of bravery and corruption, the companies, the insurance companies of the insurance markets are not interested into cover your defense cost. Then the underwriters put a very specific clause exclusion of bravery and corruption. If the claims derivates from an act of bravery and corruption, you will have a declination of the claim instantly, because the markets and the insurance company don't have any interest in to cover that kind of claims and allegations. It has sense. It is logical, I think. Can we change the slide, please? Claims and lessons learned. Can we change, please? This is like a picture of where the biggest claims in the D&O history, not just in Latin America, but in the whole world, started. Changes on regulations and specific laws, as Dodd-Frank Act, for example, globalization, Brexit, cyber risk, data security breaches, soft market, mergers, IPOs, bankruptcies. That are the common scenarios where a D&O claim could start. We can discuss this picture later if you agree, due to time reasons. Can we change the slide, please? Some relevant events. Also, I will not stop here a lot of time, but as I said, the most common scenarios where a D&O claim arises are from non-compliance, problems in the compliance procedures of the D&Os, of the management, of the top management of the company, negligence and wrongful acts, fiduciary duty, inadequate disclosure of information. Some cases in the world, public information and cases of study, and M&A, Chrysler and Daimler in 1998 that represent the D&O claim in that moment. The merger of Bank of America with Merrill Lynch in 2009. The Facebook IPO, which were very, very famous at the time. Bribery and corruption incidents in Brazil, many of them in Brazil. Bankruptcies in Germany and Western Europe in the early 2000s. Can we change the slide, please? Class actions and C coverage. We can see here just as a picture, and in order to have some image in our minds about this, the securities and class actions and settlements are increasing in these years. So that puts some pressure on the C coverage for public companies. That means that there will be some extra pressure on the premiums and particular terms in the underwriting process for public companies, especially if they have exposure on the US, Canada securities market or the UK market mainly. Can we change the slide, please? The post-pandemic and environment for D&O insurance in Latin America. This is a very brief overview of the D&O context in our region. I know this is just a little bit of a very extended topic of discussion, but at the end of the day, I think these are some of the most important topics of D&O right now and help us to understand how the insurance markets and reinsurance markets are looking the D&O coverage in Latin America. Why? Sometimes you as brokers see increases in policies with no claims to date, but maybe they are on a specific industry or they could be involved in specific scenarios that the underwriters are preventing. So you will see increases in that sense. Also, the main concerns of the markets, climate change, COVID, health and safety procedures, mismanagement, lack of information, lack of the duty of care, duty of loyalty, fiduciary duty problems, etc. So I don't know if you have any question. Sorry again, because this was very, very, very brief and very fast. But I'm very happy to discuss this later with someone in a personal chat or a phone call if you like. But in the meantime, I'm prepared to have your questions.
Thank you, Mario. There are some questions, but we are running out of time. So what I'm saying to the people that are posting the question is to give us their email address so we can contact them and answer the question, and then you can have a chat if you want. So I would like to thank you for this great presentation. It's been a pleasure to have you and to talk about D&O insurance in Latin America and the environment today. I would like also to invite all of the attendees to the next sessions, which will be about energy and will be presented by Sean Foley from Beasley, and it's going to be on the 18th of August. So thank you everybody who joined today. I think we have great attendance and people is asking questions. Patricia, I know that you are asking a question, also AC and someone else. So what I'm doing is just taking a picture of the question and I will pass it on to you, Mario, for you to answer them. And Patricia, we will share the link of YouTube so you can have it later and you can watch it at your own pace. Thank you, everybody, again, and have a great day.
Thank you.